You're watching HFO-TV.
Please join me in welcoming Maureen Bock.
All right, thank you very much for inviting me to be here today. Basically, energy has been described by the governor as the issue of our time, both globally and here in Oregon. You've heard about energy security and a whole bunch of other things, and part of what we do through the new energy incentive program that replaced the business energy tax credit program is focus on things like maximizing energy efficiency in residential, commercial, industrial, and public buildings. We look at renewables, far smaller renewable program than we used to have under the business energy tax credit program, and then also accelerating the use of alternative transportation fuels. And we do that through providing incentives for alternative fuel vehicle infrastructure and transit primarily. Oregonians spend about $65 billion annually on energy, excluding transportation, so it's kind of a big deal. And one of the things that the legislature has decided to do is provide incentives and forgo general fund revenues so they can reduce the need for growth of new facilities in part and meet demand growth through energy efficiency. The agency's mission itself is to reduce the long-term cost of energy for Oregonians, and we do that through all of our divisions, which includes the policy division, our nuclear safety division, energy facility siting, and then energy development services. My little group resides in energy development services, and it includes not just my program, but also the energy loan program, small-scale energy loan program, which does not compete with your friends here, but they do provide relatively low-cost loans for energy efficiency projects, renewable projects, recycling projects, a myriad of things. So that's one of the major components of our division. The other two divisions or groups in the division are my section, energy incentive programs, and then we also have another section that deals with residential compliance issues and biomass. So we kind of have our tax credits split up. How many of you are familiar with the business energy tax credit program? So a number of you have used that. The new program is very different in that we actually have migrated to a capped program. So for conservation, the program is capped at $28 million a biennium, and except for the small premium projects, those are all competitive offerings. So you have to compete for your tax credit against other projects. And in part that's because we have a statutory mandate to pick the projects that yield the most energy savings per tax credit dollar spent. So, and they have to have greater than a 3-year simple payback. So you're looking at competing with other projects if you compete in one of our traditional offerings. And we open them periodically so we can actually compete those projects. In your materials is actually a flow chart of how that works for opportunity announcement, application, completeness review, and those things, steps you through that. If you have any questions, you can talk to me later. Probably the part of our program that is most useful to apartment owners, it would be the small premium projects. And those are projects that have no greater than $20,000 in project cost. The credits are deemed credits based on energy savings. Our technical staff has done that work. So if you go out to, and those are not competitive. So what happens in that program is you go out, you reserve your credit through the informational filing and pay your fee. You do your project in a year, and you get your final tax credit based on that.
Is that $20,000 per building or $20,000 per complex?
Per project.
Can we divide the project by building?
Yes, you can. Absolutely. So the ones that we see, we have about 14 different things that we do in that program. We have some apartment complexes that have done solar thermal hot water. That's an offering potentially for you to consider. We see that with some laundry facilities, but mostly with pools, hot tubs, that kind of thing. So that's an offering. Ductless heat pumps is another one that we see quite a bit of. And there's, I mean, you can read the list for yourself, but those are generally the ones that we see the most of. So for energy efficiency, we actually have a number of paths for people to come and access our agency. We are usually the ones that get the call first because people are interested in what they call the free money, even though it's not really free because you have to pay a fee to actually access our programs. Renewable energy used to be a tax credit. It is no longer a tax credit program. It is now a grant program. And those grants are competitive. They are funded through the sale of tax credits. So we have $3 million a biennium. We auction every fall $1.5 billion or million in credits. We get that pool of money. We open an opportunity announcement, and if people want to do like solar on their complex or something like that, they would compete with other projects, and then we select the ones again that yield the most energy production in that case to the amount of the grant. The maximum grant you can receive is $250,000, which isn't a lot if you're doing a lot of money on a project, but it's up, and it's 35% of your eligible project cost, capped at $250,000. So that's another offering potentially that you could use. We also have transportation credits that are capped at $20 million. Now, that is available right now for alternative fuel vehicle infrastructure, which includes electric vehicle charging stations, which you can obviously put in an apartment complex. Those are 35% of eligible project cost. The only thing that we limit by rule is how much we'll pay for electrical connection. So if you're running electrical connection very far from the main, you would be capped at what you could spend on that. But other than that, it's 35% of your eligible project cost. The other part of transportation right now is for transit services. Unless you're a public entity providing transit services, you're not eligible for that part of the credit program. In 2015, however, we will be able to offer a credit for alternative fuel fleets. And so for those of you that have services you're providing, if you're using electric vehicles or CNG and doing deliveries to different complexes, or you do maintenance in different complexes, you might want to look at that program. You have to replace 2 vehicles out of your fleet or convert 2 vehicles in your fleet to take advantage of that program. For those of you that have structured your facility so you don't have a tax liability, you still have the ability to pass your credit through to someone. They pay the net present value of your credit, and we reissue the credit for your project to someone who has a tax liability. So for projects that have greater than $20,000 in project cost, you take those over the 5-year period. If it's under $20,000, it's a 1-year credit, and you can take it immediately. The other thing I should mention on the auctioned credits, which are for sale in $500 increments for a minimum bid of $475, those are also 1-year credits with a carry-forward provision. So in the past, we've seen relatively large, chunks of those being bought, like, $10,000 worth of credits at a time. So there's a slide it's the 14th slide in your packet, if you have the slides. It actually outlines the differences between the new program and the Betsy program, which sunsets on July 1st of this year. For most of you that are familiar, like I said, the old program was first in, first out. New program, it's competitive for the most part unless you're doing small premium projects. Under Betsy, you paid the fee. At the time of application, you're pretty much done unless you amended your project. Under the new program, you pay as you go, each step of the way. So you pay to play, basically. You pay an application fee. We do completeness review. If you get passed on and selected for technical review, you pay another fee, and then you pay at final. So we've unbundled the fees because our program is cost recovery program. And then we also charge a fee for our pass-through assistance. So that is, and we also have a compliance program. So that's something else you should be aware of. If you do a project, you would expect an on-site visit from our compliance team. They come out, they make sure that your project is done as it was pre-certed or as you have declared changes to that. And then if you do something different, we would recalculate your energy savings and potentially reduce your credit. In no circumstance would you get a credit greater than what you're pre-certed for or for what your information filing is for. That actually protects you in some cases, and it also protects the state. I think my favorite story was about a business in Salem that actually did a lighting project and paid in full for their project. My compliance team went out, counted fixtures, as odd as that seems, and found that there was a shortage of fixtures that had been installed, even though the bill was for the full number. The compliance team contacted the project owner and said, "You realize that you only have X number of lights instead of Y?" They said, "Well, no, but our workers were complaining that it was kind of dark back there." They contacted the installer came back out, installed the lights. We passed the project, and it moved on. But where we can get information from other inspection programs, like the Energy Trust of Oregon, we will use that instead of having on-site inspection. Otherwise, we do come out and do those on-site inspections. The compliance team also will go out periodically and inspect projects that are large to make sure they're still operational. We have an obligation to ensure that projects are operational for the 5-year period that the tax credit is used, so we do that as well. And for some projects, we have performance agreements. So it probably wouldn't affect anybody here, but for some of the projects that are unique, we actually have performance agreements, so we get reporting on energy generation or energy savings, and we can confirm that over time, and we use that information then to true up the incentive rate. We also have an obligation to report to the legislature, so that's the other thing we do with that information. If you're interested in our program, the best thing to do is to sign up on our website for updates. We push information out, so when we do rulemaking, you would get notice. If we're contemplating any changes to anything, that's a great way to be involved, and I encourage you to do that. It will give you notice of opportunity announcements. So if you're doing a large apartment complex, doing something, on the building envelope, you would get information so you can compete in that process if you have a desire to do so. And the information on how to do that is in the packet of information. In addition, there is also information on our website. Paul Zollner is the loan manager for the Small Scale Energy Loan Program, so if you have questions about that program, his contact information is in there, as well as his email. Mine is in there. I said I run the Energy Incentive Program for businesses. And Matt Hale runs the Residential Energy Tax Credit Program, the Biomass Program, and the compliance team has now transferred him. So he's the guy that handles that. His information is in there. And that's pretty much it.
Thank you.
Thanks for watching HFO-TV. To learn more about HFO, call or visit our website.